Individual or a business that had plans on hold because you were waiting for the Federal Reserve to reduce the interest rate, it has happened. Now, this rate impacts mortgages and loans and many other aspects of our economy. Yesterday, it was reduced by 25 basis points. With more on what this can mean for you, the managing director of Morgan Stanley New Orleans, Jim Spiro. Thank you so much for joining us as usual.
Thank you.
So this new rate will be in the range of 4% to 4.25%. What does this mean dollar-wise? If just 2 weeks ago you were trying to get a loan and trying to get a mortgage, what's that difference?
Well, if you had a $400,000 or $500,000 mortgage, 30-year mortgage, you went from 7, you dropped it down a quarter. It's about somewhere between 50 and 75 bucks a month that you would be saving. But I think your viewers should realize two important things here that are relevant to your question. One, in terms of yesterday's activity, I don't think you're going to save any more than you would have saved 2 weeks ago. The reason is markets move well in advance of news that you read about. So the market has been telegraphing this for the last several months. And in fact, during the course of this year, from earlier in the year now, a 30-year mortgage has dropped somewhere from the upper sixes to about 6.25. So that move was telegraphed by the Fed. Additional reductions are likely to bring the mortgage rate down. But the other thing that folks should realize is that the Federal Reserve, Liz, controls overnight interest rates, short-term interest rates. They have a tendency to impact, but they aren't joined at the hip to mortgage rates, which are tied to the 10-year Treasury. Those are more a reflection of what the global investment community thinks about the outlook in this country for inflation, whether the country is being a good steward of its finances, things along those lines, whether the U.S. is a good place to put money. The Federal Reserve really doesn't have direct control over that. And if you recall, a year ago when the Federal Reserve cut rates a full percentage point, mortgage rates actually went up. So I think you will see some relief. I think that relief was telegraphed, but it isn't, as I say, joined at the hip.
Yes, but nonetheless, for people who just woke up and weren't watching the news yesterday, that is a change for them.
It is, and it's also a mistake. They should watch your news every day.
Okay. What other aspects? Some businesses said they were putting plans on hold, and they may still hoping for other interest rates cut. What are some of the other things, a ripple effect throughout the economy? Because we talked in the past about businesses just like in a waiting mode for a number of reasons. That was one of them.
Well, I think people in business, Liz, will look at this, and I think they'll maybe make a little sigh of relief, not so much because of yesterday, because a person in business follows the financial markets, but more importantly because the Fed telegraphed the likelihood of additional rate cuts coming. On the other side of the coin, and I don't mean to equivocate, but it's not such a clear-cut argument, the reason the rates are coming down is not because we are getting our financial house in order, which would be ideal, but because the economy has exhibited a great deal of sluggishness recently, and the Federal Reserve is trying to recognize that and put a priority on that over inflation. They realize the job market has been very, very weak. Most people in business have seen that in their businesses, that things are a little bit sluggish. So I think the glass is more half full than half empty, but looking ahead, the course is not quite as clear as just a flat-out rate reduction. Good thing to celebrate.
Yeah, I mean, there are a whole bunch of factors, but we did have at one point, not too long ago, like a 9%.
That was...
When we were looking at inflation.
That was unsustainable.
We're down to 2 now, so that's why some people are saying maybe they should be more of a rate cut, because it was at 9% at one point, and we're at 2 point something now.
That's correct. That was unsustainable, unbearable, and more importantly, I think that's a testament to the fact that this is not an easy job the Federal Reserve has, and while it's easy to point fingers, over the last 2 to 3 years, they've actually done a reasonably good job, and people should be cognizant of that.
Okay, we watch and wait. Thank you, Jim.